Amazon reported second quarter earnings on August 1st. Revenue was below what the street was looking for, but EPS did beat consensus. The market wasn't happy despite the overall growth right across their offering mix, selling the shares down at one point by more than 10%. Revenue for the quarter was up 10% year over year and 3% quarterly to 148 billion. Gross margin surpassed 50%, the highest it has ever been. Operating profit reported 14.7 billion, down 4% from last quarter, as Amazon's operating expenses increased by 4 billion, but was up 91% from Q2 2023. That gives us a 10% operating margin. The bottom line was 13.5 billion, up 29% and 100% respectively, or a 9.1% net profit margin. And the street still wasn't happy. Quarterly income statement figures show us that net revenue has been growing by 2.24% from Q2 2022, the gross profit by 3.4%, operating profit by 18%. In Q2 2022, Amazon lost $2 billion. If we take the last 8 quarters instead, net income has been growing by 21.3%. Let's drill down to the segment revenue. Online store sales in blue is Amazon's largest segment. It earned 54.4 billion, up 1.3% sequentially, 4.6% annually, and over the last 9 quarters, better by 95 basis points. Their third-party business in yellow generated 36.2 billion, up 4% quarterly, 12% yearly, and 3.2% overall. Advertising in green was Amazon's best-growing segment, not AWS, expanding 8% from last quarter, nearly 20% from Q2 2023, and by 4.3% in the last 9 quarters. Look out, Meta and Alphabet. Their subscription segment in orange has been growing by 1.3%, 9.8%, and 2.4% respectively. It earned 10.9 billion. AWS, the cloud service, earned a record 26.3 billion, up 5% sequentially, almost 19% year over year, and by 3.2% overall. Amazon's revenue by geography shows North America in blue as their principal market, earning more than 90 billion in Q2. Growth has been better than 4% sequentially, 9% year on year, and 2.1% since Q2 2022. Their international business, second in terms of revenue, produced 31.7 billion, slightly softer from last quarter by 85 basis points, but up 6.6% compared to Q2 2023. Expansion overall in this segment has been 1.8%. AWS in yellow, as mentioned above, continues to perform well. Amazon's fundamental valuations show that earnings per share were $1.26, up 28% and 95% respectively. Expected earnings were $1.03. Amazon has a trailing PE 40 times compared to the S&P 500 at nearly 28. The PEG ratio is 0.86. Sales per share were $56, slightly improved. Amazon has a price to sales of just 3. Amazon's book value is $22, giving us a price to book value of 7.6 times. Cash per share is $6.65 with marketable securities. It's $8.32, giving us a price to cash somewhere between 20 and 25. Leverage ratios have the debt ratio at 0.1, debt to equity at 0.23. Interest coverage is 23 times. Liquidity ratios have the current at 1.1, the quick at 0.88, and the cash at 0.45. Return on assets were 8%. Amazon added a record 17.6 billion to its property, plant, and equipment this quarter. Return on equity was 18.8%. Return on capital employed was almost 14%, and return on invested capital 16.7%. Amazon's effective tax rate is 17.8%, which puts NOPAT at 44.7 billion, and they have an average debt and equity of 267 billion. Amazon's cash flows look good. Operating cash flow was 25.3 billion. Investing outflows were 22 billion, primarily from property, plant, and equipment we mentioned earlier, and 8.4 billion of share buybacks. Financing outflows were 4.5 billion. Free cash flow to Amazon is 7.6 billion. This is a price multiple of 234 times. Amazon doesn't pay a dividend. The enterprise value of Amazon is 1.78 billion, which is only 3 times revenue, 17 times EBITDA, 33 times EBIT, and 233 times cash flow. Amazon provided third quarter guidance with revenue expected to be somewhere between 154 to 158.5 billion. Operating income of around 13.3 billion. We use the effective tax rate above of 17.8% to come to an EPS of $1.02, which gives us a forward PE of 39. Key takeaways from the report: the revenue growth was good across all services. Margins were improving. The fundamentals look favorable. The PEG ratio below 1 shows earnings are growing faster than the price. Price to sales, cash, and book value multiples look cheap. On the con side, there wasn't much other than the PE, which makes the stock a little expensive. The capital expenditure, like most firms trying to capitalize on AI, might not justify future returns. Time will only tell. We are giving Amazon a buy rating. We have no exposure to this company. Like and subscribe.